Okay, so just a quick show of hand, you can type out in the chat who have been subscribed since December. Okay, Henry. Ah, so sad. Just Henry. No more? No idea. No idea is good news to me because you probably don't know how much you have paid lah. Because those who are very mindful of how much they have paid, they will have no how long have they been subscribed to. Okay, Jerry. Eileen also. Okay, so for those who have been subscribed since December, right? So for those who do not are not aware, actually November, December, and January also, it has been actually the first half of January lah. The market was pretty bullish, and we do have a lot of trades from last year December and even November and January we managed to take profit on a lot of the trade, but of course when it comes to February we are hitting a bit of a flat market lah, and of course the both all the market US, Singapore and Hong Kong, all three market for February has been either slightly flat or they have been going down. So for those who are subscribed since December, right, you probably will be doing not as well during the month of February, which is per- perfectly fine, mainly because if the entire market is not doing well, right? For example, for Singapore, right, if you have 280 counters out of 300 counters that are down, right, it is quite um expectable that most likely most of your counter will be down. Most of your counter will be down also. So just to ask for those who have been here since December, right? All those profit that you have made in December now comes February. Have the market taken back all the profit from you, or in February you have probably hit a few stop loss, but you still retain most of your profit. So for those who are still in the green, right, since December, right, can you type yes or can you raise your hand? Okay, Timothy. Okay. So for those who are in December, you make some profit, but when it comes to February, when market is start to turns a bit red, those for those who have sort of from green become red, right? Meaning overall, if you include all your December profit, you are currently in the red right now. Can you raise your hand or say yes? Okay, Henry. Okay. So what I want to Jerry. Okay, haven't trade yet. Oh, Brian haven't trade yet. Okay. Okay, can. So before we start the usual stuff, right? I just briefly want to go through with you how a typical trading life is like personally for me also lah. So personally for me, right, during December and January, right, I have definitely made quite a good profit, but of course, like most of you all during February, we have hit a few stop loss here and there. Even those counter that I was originally in profit, right, they have dropped back down to almost negative. So currently on my broker, I'm my current open position, right? They are about negative 30,000. Sorry, negative 3,000 like that. But of course, personally for me, my account size is 100K, so 3,000 comes to about let's say about 3% like that, which is in the rate, which is I mean is a very safe amount of rate to be in lah. But perhaps for you all, right, if currently, right, the amount of rate that you are in if it exceeded 10% of your total capital that you have for trading, right? You do have to be careful a bit because current the market drop in February is a very small drop. It's not a very big drop. So if you are already holding more than minus 10% of your total capital, it does mean that you are actually overexposed, meaning you are entering more than what you can handle on a single position, or you have too many trades open and all of them are facing red. So my recommendation is that at one time, right, at one time, try not to have more than 10 trades open, because you do realize that I give out quite a lot of trade setup, but if you notice February, the number of trade setup was reduced quite drastically, mainly due to Chinese New Year. But even after Chinese New Year, right, the amount of trade setup that I post is not as much as back in January lah. This is mainly because when market is quite bad, right, the scanner itself doesn't really give very good setup also. There are a few setups here and there, but they are not really a very optimal, the best setup that I can find. So the number of trade setup also reduced, but this is mainly because it reflects the current market status lah. So if the market is flat, right, you don't want to be making trades, but rather try to hold on to the existing trade that you have. And the worst thing you can do is, of course, you prematurely exit all your trades because everything is red and you try to chase other trade to make back your profit. That's the last thing you want to do. So let's look at the S&P index lah. This chart here, right, it is on a weekly frame, weekly time frame. So if you look at from December onwards, right, let me draw a line here. December is somewhere here. Okay, so if you look at December all the way until now, currently now, right, market is sorry market is considered generally still in a bullish state from December until now. So when market reach here, right, somewhere here, right, you probably have made a lot of profit. You probably, hopefully you make some profit during this period, and now market is turning a bit during this period. So what you are supposed to do as a trader is, during the time when market is bullish, right, you are supposed to sort of get as much profit as you can during that bullish period. So it is like make hay while the sun is shining lah. Hence you will notice I give a lot of trade setup, and most of the trade setup, they tend to TP quite well. We have quite a lot of good trade setup that we had back in last year, the end of last year. We have counters like Union Gas, which currently went up a lot. We have things like High P and a few other counters that did went up over 100%. For example, LAC went up 100%, almost close to 100%. Then we have the clean cell fuel energy, which also went up about very close to 100%. And even on the Hong Kong side, we have counters such as Mekong Power, which went up quite a lot lah. So during the bullish period, right, you have to make a lot of profit as much as you can. The reason is because when the market turns, right, you are definitely going to get a few stop loss. This one cannot be avoided. As a trader, right, you will be faced with stop loss once in a while. It can never be avoided. So when you start hitting those stop loss when market turns, right, you have to ensure that it doesn't undo all the profit that you have earned. So perhaps in December, let's say you make about 30% return, which is I would say very good. But when market turns during currently this period, you should not lose more than 30%. You should probably lose about, let's say, 15% like that. Then you are retaining 15% of the profit that you sort of earn during the bullish cycle. So when eventually market recovers, right, you will still be in the so-called in a very profitable state. So this is the ideal situation that you want to be in. So if you are someone who started during December, if you join me during December, or even way before December, way back in like October, November, where I give trade setup on Facebook, right? I do hope that you do manage to get a lot of enough profit that when during this period market turns, right, you retain most of your profit. And that's how us as a trader, we are earning day in, day out. And and the thing is, during this very profitable period, right, when everything is going up, right, let's say the example that we give just now, during that bullish period you make about 30% profit on your total portfolio within that 2 months. So during this, right, you cannot tell yourself that, oh, within 2 months I make 30%, meaning within 1 year I am going to make 180%. It is not that. You cannot say like that, because it doesn't mean that throughout the whole year every month is a bullish month. You will encounter some bullish month, bearish period, bullish month, bearish month, bullish month, and a bearish month. So during the bullish month, you want to make as much as you can, and during the bearish month, you want to minimize as your loss as much as you can also lah. So if you look at the S&P chart here, right, you can sort of see that pattern coming out. We have a very bullish period. We have a very bullish period here. Then we took a break. So whatever that you earn here, right, you should retain most of them. You should not give back all your profit during this retrace here. And of course, same thing, market continues to go up. Then after that, it had a small break, and then it continued to go up. And now it is actually, I will not consider this as a break at all, because this one is actually, excuse me, it's not really a big drop. So even on my trade setup, let me open my trade setup. Even on my trade setup that you see here, right? We currently we have taken, I think we have reached 4 stop loss already lah. Currently, I have not updated this yet, but we have hit four stop loss. We still have a lot open. We still have about a total of 24 open trades that have not hit any stop loss or have hit the TP yet. But of course, we have 16 counters that we have already hit profit lah. So during this period, right, the worst thing you can do is you go and close out all your open trade, and then everything become a loss. But who knows, if next week market recovers, right, what is going to happen is that all these open trades you see here, right, they are actually going to turn profit, and you have stayed in the trade lah. Which is why I always really emphasize that unless it hit the stop loss, right, please do not exit, because you don't really know whether if market is going to go all the way down or it is continue to go up. So you can ask that, what if market start to go all the way down here, then all those trade, it will have been hit with stop loss already. And yes, of course, when market does go down like this, right, you are definitely going to hit with stop loss. But which is why I advise that you should not hold more than 10 open positions. So let's say you have 10 open position and you are risking about 1% or 2% per position, right? If all your 10 positions sui kena cut out, right, then it will mean that you will probably lose about 20% of your total, 20% of your total capital lah. But let's say if during the bullish period you have gained about 30%, right? If you lose back that 20%, you are still sort of overall in a bearish state lah. So you do need to keep all this thing at the back of your head, because when things start to go down, right, emotions start to take over lah, and we have to ensure that regardless of what happened, we have to keep keep to our trade plan at all costs lah. So when market start to bearish, right, you might not be seeing me post any trade setup at all. But during this period, during this current period, I believe market is still really not bullish yet. And currently, I'm holding on to about eight position. Later we will go through some of the position that we sort of I sort of given through January and February lah. So if you guys are still holding on to some position, have not hit stop loss yet, right? Don't be too afraid over it. You can just continue to hold, and those that hit stop loss, right? Same advice. Please take the stop loss. Don't try to shift the stop loss lower or do anything that is outside of the trade plan lah. Currently the market as it is, right, I would not recommend any shorts. Shorts are very dangerous lah. Shorts are very dangerous. So when it is time to short, I will start to post some short position lah. But even though you do see counters start to go down, right? What you are essentially trying to do is you are trying to short at the top. We should never ever short at the top. We should short when support is broken. But for most of the counters, support are not broken yet. Support are still intact. They are merely retracing. So during retrace period, right, what you do not want to be like the price go up, you go then you try to predict the top and then you go and short. Then what's going to happen is when everything recovers, right, you are going to get caught here lah. And most of the time, right, short position are also they are going to incur you a lot of finance charges lah, finance charges lah. So when it is time to short, right, I will put out some short setup, but currently it is not the time yet. Why it is not the time to short yet? If you look at S&P chart, the support is here. So price can actually come back here a bit, stagnant a bit, and then continue to go up. So even likewise here, right? If you look during this period, the support was actually here. So it hit the support. When price come back down, it hit this support, but after that, it continued to go back up. Then even during this period, the support is somewhere here. So we never really had any support broken also. So if you look at STI itself, right, the support is currently at 2800. So actually STI last week is quite consider a bullish week, and we have not broken any stop loss yet. So what we do not want to do is we do not want to short at the top here, because you do not know price is going to chong straight up or is going to go all the way down. If you do that, right, most of the time, right, you are taking a very extremely risky counter trend trade, and you might end up hurting yourself lah. So to summarize, now is not really a time to short yet, but when the time to short comes, I will definitely put up some short counters lah. And of course, HSI is, I will say, one of the more weaker index among the three. You can see the red candle itself is quite strong, but even then, right, the support here is still holding. The support here is still holding, so it is not really considered bearish yet. It might go down some more next week, but eventually, I think as long as this support hold, right, it is going to recover. And in terms of market structure wise and a bit of the fund flow, right, the fund flow are not giving me any kind of bearish tone lah. So we are sort of still relatively safe, and hence during this period, if your counter has not hit the stop loss, right, you should still hold on to it. Perhaps the counter is very near the stop loss, but it just won't hit. It's probably just lingering down there, and that is usually expected when market turns, because the stop loss is there to ensure that you are in the trade. So if it's not hitting, right, because my stop loss are usually placed below the support. So if it's not hitting the stop loss line, meaning the support is still intact, meaning everything is still bullish, so you should not prematurely go and exit your counter. So one of the example that I can give you are AEM. One of the example that I can give you, let me change this to daily. So Aem Trade Setup actually came out here. Unfortunately, it was at the top, but at the moment of the trade, right, we don't really know this is going to happen, because this is a very bullish candle and it can actually go up. But of course, it happened the opposite direction. But when it come down like this, right, it doesn't really matter, because the support is here, which is why you will see that my stop loss is at 3.80. So maybe in the next few days, AEM might hover around here, but it wouldn't really break through this support unless the market is very bearish or something bad happen. But it will probably hover around here before it start to go back up. So even though the price has gotten quite deep here, right, you should still hang on to your position and not prematurely exit. And hence you will see that my AEM trade setup, let me go and find the AEM trade setup. There are three entries. There are three entries given, which is usually to ensure that you are not totally stuck at the top. You can enter a bit more here and enter a bit more here, given how this current trade setup is like. So personally for me, I have actually entered all three positions already. I think you all should see the screenshot on Facebook that I posted. I'm currently negative 1,300 on AEM right now. I slowly buy a bit here. When it come down here, I buy a bit some more. When it came down to 4.02 like that, I bought a bit more. And now I'm actually sitting at a relatively safe position. My average entry come to about 0.42 like that. So eventually, right, so my average entry actually around 0.42 like that. So I have one entry here, and then one entry here. So eventually when price recover, right, even if it hit the previous high here, right, I will already be in profit because my average price is quite low lah. So you will see that for counters with a stop loss that is pretty wide, right, I will give recommendation of many entry. So what you can do is also you can actually skip the first entry and take the entry at the lower point. But if you do that, right, if you do that, you run the risk of when the stock run all the way up, right, you are going to miss the entry lah because you chose to wait here. So there is risk and reward, but I try to make the best of both worlds. I will always enter a bit here, and then when it drop further down, I will enter a bit some more there. So I will still get a so-called get a relatively safe average price, and let's say if the price shoot up, right, I still have some position at the top there lah. Okay, so for AEM, right, you are correct. My risk is actually 1% per entry. So now that I have three entry, right, I'm actually risking 3% for this lah. So 3% is if I hit my stop loss, right? If everything go down and hit my stop loss, right, I will exit all three position, and all these three position will incur me 3% loss on my total portfolio. So that's the risk I'm taking now. So all my entry for AEM has been done. I am not going to enter anymore. So I'm just probably going to just sit and wait. Okay, so likewise, right? Likewise, you do have a lot of other. We do have a lot of other counters that are like hanging around there. For example, let's say for Palantir also we do have a very um good support here, but price is sort of hanging around there. I think my stop loss is like somewhere. Never mind. We can always look back here. Where's my stop loss? We are still sort of hanging. So we hit the second entry already. We are still sort of very still quite a distance away from the stop loss lah. And eventually, if this recover, right, we definitely will get some profit from this also lah. So since the market is not really very bearish, right, you should not prematurely exit all this, because what happened is if next week the market become bullish, right, you could have taken a loss when you could have gotten a profit. And I have mentioned many times that taking a loss when you should have gotten a profit, right, is the worst kind of loss that you can take, because not only you took the loss, you also sort of miss out on the profit that you could have gotten lah. So Palantir is one of the uh counters that are facing like this. They are is hovering around at the support there, but definitely if it hit the stop loss, please exit the counter lah. And of course we have United Steel also. So United Steel, the stop loss is like somewhere here, and we are hovering around the support. And what is this? This is Swire Pacific. So Swire Pacific is Hong Kong lah. So Hong Kong, for this counter, I entered like somewhere around here. Initially it was in the profit, then it came back down, then it recovered. So I am currently sort of still in the profit. So I'm not really too worried about it. It is just that maybe 2 weeks ago, right, I have like $1,000 profit on Swire. Then 1 week later, I look at it, that $1,000 become like $100, which is very normal. You have to be disciplined to make it through this kind of period, because if you don't, right, if the loss that you take is more during a short retrace compared to the profit you have taken during a big uptrend, right, then you have a very serious issue as a trader, because no matter what strategy you are using, no matter what kind of scanner, whatever, right, it is not going to help you, because the core issue is not the strategy, not the scanner or whatever, right, but rather you as a trader being able to follow a particular discipline or not, and that is what make a difference between a good trader and a bad trader lah. Definitely, if you have a good scanner, good trade setup, good stop loss, right, during the bullish period you are going to earn a lot of money. Def- Definitely, but when that bearish period come, right, you're gonna panic and you're gonna give back all the profit. So what happen if you have a truly bad period, like the COVID-19, like this COVID-19? So when this kind of period come, you're not going to just give back all your profit, right? You're going to lose even a lot more stuff. So of course, my trade setup and my scanner, it does prevent you from going into position during this kind of period lah. But what I want to say is that if you cannot handle this little drop, right, most likely you are not going to be able to handle this kind of drop. And in your trading journey, let's say you are going to trade for the next 10 year, 20 year, right, you will definitely face this kind of drop, and you must ensure that all the profit that you have gotten in the past 2 3 year, right, you don't give back within this 1 2 months, and that is very very important. Just now, where was I? I was still going through some of the counters. Okay, yeah. So we have Swire Pacific, of course. AEM, we gone through AEM already, and this one is Oceanus. So Oceanus still very very in a bullish state. You can see that none of the support are broken. I think when I entered Oceanus, it was, I forgot where already. Maybe it was here. Then we hit the TP lah. We hit the TP here. And then recently, I'm sure you all saw the profit news, right? I think Oceanus did really, really very well. So hopefully, of course, I take the TP here, but as you all know, I don't fully take my TP. I still have about 30% left that I'm still holding. And hopefully, if Monday continues to go up, right, I will still be able to ride the remaining trend with the 30% that I have lah. And I think if the trend is very good, right, I will put up a second trade setup also lah, depending on how the chart is like. And of course, we also have PayPal. PayPal initially my entry was here, then I was about a few $1,000 in profit. Then after that, I see that $2 3 thousand in profit become like $1,000 loss like that. So it's very normal. It's very very normal. And I'm still holding on to it because my stop loss is like here. So let's look at PayPal. Where's PayPal? PayPal. Yeah, stop loss is like way there. So of course, if you look at PayPal, right, it seems that we sort of barely missed the TP level lah. So personally for me, right, if it doesn't hit the TP level, I'm not going to exit. It doesn't matter if it's like a bit there to the TP level. I don't TP lah. If it come back down and hit the SL, right, I just let it hit the SL. Because if you start to exit before it hit the TP, right, what's going to happen is for every other trade you're gonna like TP prematurely, and the result become like during the bullish period, right, you are not going to make as much profit because you are TPing a lot of things prematurely lah. So I will never exit before I hit the TP also. Then we have J2 Global. I think J2 Global is one of the currently counter that I am still in the profit and I'm still holding on to the profit. So the entry was, I believe it was here. So I'm currently still in profit lah. So for this one is doing very well than what I expect it to be like. It's not really affected by the current market retracement like that. And of course, next we have Netflix. Netflix, I entered somewhere around here. I think stop loss was here, but right now we are having like a good support level, and hopefully, it will go back up lah. So currently, upon my first entry, right, it just went down, and it is still in the negative mode lah. So it is not like you guys are stuck in the red, everything stuck. I personally, I'm also stuck in a lot of counter during this period. I'm also in a position where a lot of counters are in profit, but they have suddenly become very little profit, or worse yet, into negative. But as long as my stop loss is not hit, right, I am still holding on to it. And of course, the Anhui Expressway, which was set up very early in January, I think the trade setup was here. Now it has been almost going 2 months plus already, and I am still holding on to it. So there is nothing bearish about this chart. In fact, this chart look extremely bullish, because you can see that as long as one it hit the support, right, all the volume coming up are actually very bullish volume. So I'm just waiting for this to sort of like get to a very big breakout lah. The only thing that I do not know is when is that big breakout going to come. Is it going to go stagnant another 1 month, 2 months? If it's going to go stagnant for that 1-2 months, I'm still holding it, and I'm going to wait for that breakout. So as long as stop loss is not hit, right, I am not going to exit this counter also. So most of the time, when people cannot hold a counter, they exit a counter to chase another counter, right? If you are always in that position, you can ask yourself one very simple question. uh, let's say if you have unlimited capital, okay, maybe not unlimited capital. I think that one a bit far-fetched. Let's say you have enough capital to enter whatever that you want to enter. Will you still have exited your current trade if you have the capital to enter whatever counter you are looking at? If your answer is yes, right, then it is not the issue with the current counter that you are stuck in. You are perfectly fine with being stuck, but your issue is you do not have the capital to go and chase another counter that you want. So deep down, the main issue is you are not properly capitalized, because you want to trade more. And I have said this many times, that every day, no matter how bad the market is, there will always be some counter running. There will always be something running. My scanner will always show some counter go up 10%, 20%. So you need to prevent yourself from getting that FOMO feeling lah. Because suppose you exit this counter and go and chase another counter, right? Maybe that counter, the moment you go in, it will be stuck, and then your this counter that you exited suddenly run up. You will run into a lot of that kind of position lah. And what you have done is that you simply wasted two commission charges lah. So if your answer to the question that if you have more capital, you will not exit the position that you are stuck, right? Then you should not chase that new counter. You should just hold on to your position and be patient lah. And if you are patient, right, definitely good things will come lah. So the core issue here is always the issue of capital. Make sure that you are properly capitalized if you are trading. That's the most brutal truth that as a trader I can tell you lah. And if you want to know a proper amount, right, $10,000 is not enough. $10,000 is not enough for trading. $20,000 also not enough. $30,000 is okay. Is maybe you might have to bear with being stuck in a few counter, because let's say you enter like 4-5 counters, right, your $30,000 will be used up already. So when come to AEM, right, I actually have 5,000 shares, 5 lots, and that 5 lots is already about 20k already. I have probably about like maybe 1,500 here, 1,500 here, then probably another 2,000 here, something like that, and I have about 20k stuck there already in just one counter. So if you do not have the capital to do this kind of play, right, then your option is very limited. So when your option is limited, the best thing you can do for yourself is to be patient. Do not chase here, chase there, chase here, chase there, then end up you don't even get a single counter lah. And okay, so with all that said, right, so I gone through some of the counter that I'm holding, and they are still kind of stuck there lah. So I do hope that this sort of give you at least like how to say a sign of consolation that I mean I'm also in the same position. I'm sticking to my trade plan. I'm not going to do anything funny that is out of my trade plan. Okay, so let's come to the fund flow analysis chart. So you can see for last week, right? Last week, the institutional for Singapore, right? This is the Singapore fund flow. It is currently back in negative, but also even though it is back in negative, right? It is about slightly below only, and I believe that tomorrow when the fund flow report come out, right? The institutional should go up also, mainly because Singapore market, it was quite bullish lah. It was quite bullish for the last week lah. And if this bullishness continue, right? Excuse me. I do believe the market can be remain bullish. So for Singapore market, as long as 2800 is not broken, I am still bullish. And if you look at on the cumulative, right, of course you can see the institutional fund, it start to go up but suddenly going sideways a bit lah, and it has been going sideways since like probably about 2-3 months like that. 2-3 months like that. And if you look at the straight time index fund flow, the straight time index fund flow is all the counter that are in the straight time index, meaning your three banks, or your Maple Tree, or your Keppel DC rate, all this kind of thing. So you can see a similar kind of pattern here. But as I mentioned, what you can also notice is that for the fund flow, right, you can see that previously the institutional have always been on below the zero line, but right now we are slowly coming back above, is slowly staying above the zero line lah. It is positive lah. So hopefully it can remain positive and things will recover lah. Yeah, let me clear all this. Okay. So yes, in terms of all the three indexes, they are still pretty bullish. None of them has hit the stop loss yet, as I have gone through just now. So let's take a quick look at what are some of the things that is available to trade in the coming week. It's not much, because when market is bad, right, I don't give a lot of trade setup lah, but there are maybe a few counters that you might be able to like put some good trade in it. So firstly, Franken. Let me go back to the daily chart. Franken, very, very bullish recovery. And you can see that the volume behind very strong also. So what you can see from here is this support here is maintained lah. This support here is maintained. Maybe there's another support here is maintained. So this was previously a resistant here, but now it is acting as a support. So as long as this support is not broken, 1.12 is not broken, right? This one remain bullish. So let's say if I were to take a long trade on this, right, I will definitely enter at the whatever current market price is, and I will put my stop loss at 1.1. Why 1.1? Because it is below the support level that I mentioned just now. If you set your stop loss anywhere above the support level, right, price can definitely retrace, take out your stop, and then it will continue to rally, and you will be like wondering, why always take my stop loss then rally lah, what lah, this lah. So actually the main reason is your stop loss need to be below the crucial support level lah. So Franken seems quite good. Next one, Lktec. Lktec is from Hong Kong. So this counter very, very bullish, and you can see that previously this area was something like a resistant, some like resistant here, but right now it is supported quite well lah. And you can see that the Friday candle, right, is pretty bullish also. So if I were to play this trade, same thing, my stop loss will be below the support level, probably around 6.5 like that. You don't want your stop loss to be right at the support also, because price can just touch and go. Price can retest the support, then touch and go. So you want to give yourself a bit of buffer, maybe around 6.5 like that. That will be a good buffer for your stop loss. And for the US side, actually Starbucks is looking quite okay. It's sort of about to break through this resistance here, but actually it closes quite nicely at the resistance there lah. But the thing is that we have like a very good support that is being formed here, and you have a good bullish momentum here. So I do believe it can continue to go up. So on the more riskier side, right, SPH actually did quite okay. SPH actually did quite okay on the Singapore. You can see here. If you want to go for the SPH trade, although personally I'm not going to put SPH in one of the so-called tradable counter, right? Mainly because it is still a long-term downtrend, and I don't really like to take long counters that are in a downtrend. But nonetheless, it is still quite a good pick, mainly because, right, it has sort of formed a higher low somewhere here. So you can, if you want to take this trade, right, I will not um fault you for it, but if you take this trade, your stop loss need to be below this lower high, meaning somewhere around here, 1.15 like that. So if you look at the current price to 1.5, right, it's actually about 17% down, which is I think it's a perfectly reasonable stop loss. So you can actually enter a bit here, and maybe price fall to 1.2, you can enter a bit some more, so you have a very safe so-called safe average price lah. So when price start to go up, right, when price to go up, you will be able to profit more lah. So this one I think is relatively safe also lah. So okay, these are actually all the counters that I have for today. I don't want to overshare many counter also until I see that next week everything is bullish ready, everything going up, right? Then probably next week I will start to put up more trade setup lah. But until I can see a very clear sign of bullishness, right, I will refrain from putting up too many trade counters, because I don't want all the trader to like go and exit their counter that they are holding at a loss and go and chase all the new counter, because that's the worst thing, you can do lah. So okay, that's all for tonight. The main thing that I want to say is just that during the down move, just ensure that you are not losing more than what you have gained during the up move lah. Okay, so have a good night everyone, and hopefully next week we'll have some bullish movement coming in lah. Thank you.